Hello guys, this is Nitin Chauhan. Today we are here to learn a new topic on GDP and national income. I hope you are doing well and thank you so much for lots of you on my previous lesson. I will come up with a new lessons in my coming series, and thank you so much for your lots of likes on the lessons. So today we are going to talk about GDP and national income. What is GDP? This lesson is presented by me, Nitin Chauhan. Okay, when we talk about GDP, its full form is Gross Domestic Product. What is Gross Domestic Product and what is national income? Today we will learn about the whole thing. So before watching this lesson, do subscribe the channel for more awesome lessons. Okay, so GDP is what? When we talk about GDP, it measures the total flow of goods and services within a domestic territory of the economy, right? So what is the measurement of the flow of goods? What kinds of goods are produced in a domestic territory? That of the monetary term. When we calculate it together, we find GDP. We find gross domestic and product. It is a measurement of total flow of goods and services within a domestic territory of the economy, right? Where you will have to understand first of all goods. What is goods and what is domestic territory of economy, right? While we talk about national income, it is a measure of total income received by normal resident of the country as reward, as reform, in terms of rent, in terms of interest, in terms of profit and wages. We know very well we require factors of production to complete the process of production of any commodity. We require land, labor, capital, entrepreneurship, and we get these all things from households, and we provide them factor payments in form of rent, interest, profit and wages, right? So these all things which we make payments, if we compiled it, if we together sum the value of which we have paid to the households, we get national income, right? For the rendering their factor service, we pay that amount in accounting year. Okay, so national income is a measure of total income received by the normal resident of our country as reward of terms rent, interest, profit and wages, right? And when we talk about GDP and national income, shows the economic health, and from the level of production, if there is an economy, production level is rising, then definitely GDP will rise, and definitely if the GDP will rise and the national income will also rise, right? The level of income year to year will rise. If you want to know what is the level of production increasing or decreasing, we will go through GDP. We will first of all think about GDP. What is the rate at GDP is growing the country, right? So in detail we study what is gross domestic product. So it refers to the market value of the final goods and service produced within a domestic territory of a country during an accounting year. Okay, so this is what it refers to, the market value of final goods. When we talk about final goods, what is final goods? Final goods, those are goods which is ready to consume by the final users. If we talk about final users, there can be two types of final users. It can be producer also, it can be consumer also, right? So if we measure the GDP, we will have to calculate the final goods price. What is the price of the final goods of the old commodity? If we together compile it, if we together sum the value of those old goods, we can get the gross domestic product. Okay, and it may be defined as a gross value added by the producing units, all the people who are participating in a production activity within a domestic territory of any country during an accounting year. Okay, how many people are enrolled in a production activity, and how many of the people are enrolled in a service activity. If they produce commodity and good services in a domestic territory, we can together sum the value and we can find the GDP. Okay, so before knowing the definition of the GDP, we will have to understand some common terms which is mentioned in the definition. First of all, we will have to learn about the what is value addition. Then we will have to learn about the what is final goods, and what is we understand domestic territory, right? So these three terms we will have to understand before the learning, before the knowing about the GDP in detail. Okay, so what is value addition? If we talk about value addition, what is value addition? It refers to the addition of value when some inputs are converted into outputs. Value addition meaning what, which you have invested some kind of goodness in some kind of goods so that the people can pay for that commodity higher than previous. So that is called value addition. It refers to the addition of the value when you input. So you have purchased some kind of goods as an input raw material, as a entrepreneur goods, and you want to convert in goods, those goods as a final goods, and you convert that goods in such form so that the people can pay more amount than your previous. Okay, so as a carpenter buy a wood 500 rupees and convert it into a table. A carpenter buy a wood of 500 rupees and convert it into a table and can charge the 1000 rupees as a revenue. So here it is a value added of 500 rupees in the form of table. Before, how can we measure? Because that wood cannot anyone can buy in 1000 rupees, because it is having 500 rupees value. And if someone is want to buy that commodity in 1000 rupees, we will have to invest their value, we will have to increase their value, and the table is more valuable than woods. So at the table, before the table, we can charge 1000 rupees. Okay, so this is called the value addition of 500 rupees to 1000 rupees. Okay, so here value addition is what? Total value of table minus total value of wood. Here is the total table is a final good, so for the producer, and here is a wood is a raw material or input for the producer. So what is definition? So said on the above line, it shows the when the inputs are converted into outputs, that is called value addition. So it shows the value addition of 500 rupees only, not 1000 rupees. If we say it is 1000 rupees value addition, it will be wrong. We have just added the value by ourselves, only 500 rupees, not 1000 rupees. Okay, so 500 rupees value added by someone else, which through which we have bought earlier as wood, right? So 500 rupees value added by that person who had provide us the wood, and 500 rupees we have added the value in the commodity, and we have the makes up MRP of 1000 rupees, but the value addition is here only of 500 rupees by us. Okay, so here total value of wood be it input. Here total value of wood is a input, and it is input, and total value of table, it is the output, which I have told you, and which is converted. Okay, so value addition, it is what? Output minus input. If we want to get the value addition, how much we have added the value of commodity in a commodity while producing commodity, we are to just subtract the output into input. Okay, so value of table, how can we get value of table? Is such kind of gross output, it is a gross output. If we talk about value of table, it is 1000 rupees. We did not increase the value of 1000 rupees, we just have increased the value of only 500 rupees. It is showing 1000 rupees, thus it is called gross value, gross output, value of gross output, because we have just invested, we just have improved 500 rupees of table, right? Value addition. So value of woods, value of intermediate consumption of the value of secondary inputs. Wood is what? It is a intermediate consumption. We have used the wood as a intermediate consumption. So we can say the other words, the value added, value of gross output minus value of intermediate consumption. You can think about any manner. I have told you you can understand through the value of total table minus value of value of goods woods. Okay, and we can measure the output minus input, or there is another way to know about the value addition, gross output and minus intermediate consumptions. Okay, so here are many methods, you can take anyone. So thus the value of net output and or value of product, briefly called production. If we talk about production, is nothing that it is the same as value addition. If we are talking about value addition in another way, we are talking about just production. Okay, so value addition is same thing as a production, we have studied. I hope you have understood that. Now we talk about final goods. What is final goods? So final goods, and those are goods which have crossed the boundary line of production. What is boundary line of production? I have a specific boundary for the specific goods. I can produce that raw material at a specific form. I can produce that wood in a specific form, that is table. Okay, so table is my final goods, it is my production boundary line. So these are ready for use by their final users. Okay, so it is ready for use by their final users and no value to be added on the final goods. Okay, so that will be called final goods. And what is final, who is final user? So final user may be to consumer also and producer also. If we talk about consumer when purchase such kind of goods for the self consumption, that goods is called that's expenditure which consumer incurred on the goods or services. That expenditure is called uh, consumption expenditure. Okay, it is called consumption expenditure. And when we talk about uh, consumer and who consume goods like a washing machine, okay, so washing machine purchased by consumer, it will be called final product, final goods. Purchase car, it will be called final goods. AC, final goods. Remember this thing, one goods can be final goods for some one person, and same goods can be intermediate goods for another person. If we talk about dealer of car, the dealer of car will be car, it is a intermediate goods because he is not buying that car for self consumption, he is buying car for making sale further, right? And the same car can be a final goods for those person who are buying that car for self consumption, for self use, right? Like the AC, if the company of the AC is a buying AC from the another industry or another making industry, so that person who are buying AC for not for self consumption, he is buying AC for the business purpose, for the resale purpose, so that will be called intermediate goods. Okay, even he is not investing any kind of thing to he is not adding any kind of value, so it will be considered as intermediate goods. Okay, so final products can be for the consumer if he consumes as a final users, so it will be as a consumer. And firm producer can be also a final user who will use goods like a plant machinery for the further production. If we talk about any company who are buying machinery for their further production, for their further production, for making such kind of goods which can be sold in the market, so thus this machine which is purchased by the producer, which is purchased by the firms, will be called final products. And that person or that producer who are purchasing those all things, that will be called final user. Okay, and a final goods and used by the producer are called capital goods. What are capital goods? Those are goods which help to make production more and which help to make production further. That goods are called capital goods. If you want to buy that goods as a producer, that expenditure is called capital goods expenditure. Okay, and it will be better consideration if we know about what are the difference between final goods and intermediate goods. In detailed information is given on the next slide. So what is the final goods and intermediate goods? Today we will know about it. So when we talk about final goods, it is consumed by the final user, and when we talk about intermediate goods, it is consumed by the intermediator or any producer who are buying it for not self-consumption, who is buying it for further sale. Okay, in a briefly I have told you. So what is detail? So final goods have crossed their boundary line of the production. I have told you that they have crossed the boundary line of production. It is not required to value added more. Okay, it is ready for self consumption by the producer also, by the consumer also. And while we talk about intermediate goods are still under the boundary line of the production, it is still yet to improve their value, and it is just to yet to improve their production activity. We are to just add the value, and they are not just able to use by the final user as a consumer by the producer. So final goods are ready for their final user, but intermediate goods are still in a production process. I have told you that it is still in a production process, and final user may be consumer or producer. I have told you that there are two users that can be called final users. First can be a consumer, second can be producer. Okay, remember this thing, one goods can be intermediate for any someone, and that same thing can be final for the someone. Okay, it depends on the nature of their occupation. Okay, so when it is forget that the mistake is it is when it is a final user consumes, final users consume, sorry. So and that the monetary payments made by the final users like a consumer, so it will be called consumption expenditure. It will be called consumption expenditure. And when it is the producer, final user, when in an economy we find the producer is a final user, and that payment is made by the producer is called capital expenditure. I have told you in my previous slide also. Okay, Now we talk about what is domestic territory. When we talk about domestic territory, it comes in our mind first is the geographical area. It is not only geographical area. When we talk about domestic territory, it includes beside the political boundaries which is shown in the map, and territorial water of the country. We know very well territorial water, part of the water in ocean, is also participated of Indian economic activities. Okay, so territorial water of the country is also included in a domestic territory, as well as aeroplane. You know very well our aeroplanes fly float on air between one and another countries, and it is done for the just because earning profit, earning production activities. Okay, getting production activity. This is only main done for operations of the economic activities. Okay, so and ships operated by its resident across the different parts of the world, and a view of generating income. I have told you that. So it also include embassies of the countries in the rest of the world. If I talk about the embassies of India is stabilized in a found in America, so that embassy is called that part of domestic territory of India. Okay, and the domestic territory in our country, in a geographical area, in a political boundaries, we find the embassy of America. That embassy will not be treated as the domestic territory of our country. It will be treated as the domestic territory of America. Okay, so it is important to note that the concept of domestic territory does not refer to the any area of ownership by the nation. It does not show the ownership of the nation. It shows the only operation taken by there. Okay, so it refers the area of operation within which value added or addition by the firm or an individual is not to be treated as a value addition by our resident in our rest of the world. What is written here is that it refers to the area of operation within which value added or addition by firm or individual is not to be treated as a value addition by our resident in the rest of the world. Okay, so all value addition which the domestic territory add up to the domestic product. It doesn't matter who invest their services for producing goods and services. If they are covered under domestic territory, it will be considered as a part of our country. It's that product which is produced by that person who can be a foreigner, that part of the community will be considered as a part of the domestic product. Okay, so all domestic product is a value addition within a domestic territory of a country, no matter who does it. It doesn't matter who participate in a production activity. If they are covered under domestic territory, it will be called the part of domestic product. Some example we can check. So value addition done by MNCs. We know about the MNCs, multinational corporation or multi-transparent corporations. So in India, at a part of the MNC produce the commodity, right? So what kinds of commodity and how much commodity MNC produce in a domestic territory of India, that will be considered a part of domestic product. Remember this thing. And likewise, value addition done by our exporter who produce commodity in domestic territory of our country and export those all commodity outside of our domestic country, that commodity which they are exporting, that commodity will be considered as a part of domestic product. Okay, so by the way of exporting goods and services is a part of domestic goods, domestic value added by the domestic product. It will be included in a domestic product. Okay, I hope you are understanding me. And if we talk about definition of GDP, what is defining, how we can define the GDP? So it is a total sum of the value added. So it is a total sum of the value added by the all producing unit within a domestic territory. It doesn't matter who are producing that commodity. If that commodity is producing in our domestic territory, that will be considered the part of our GDP. That will be considered as a part of the domestic product. Remember this thing. Okay, so territory of the country during the period of an accounting year, that part of the commodity which is producing in a domestic territory, it doesn't matter, I repeat, it doesn't matter that person is a foreigner or the resident of India. If that commodity is being produced in a domestic territory of a country, that will be considered a part of domestic product. So now we go to learn about what is different between net and gross concept of the domestic product. If we talk about, there is a GDP, it is a gross domestic product. If we talk about NDP, it is a net domestic product. What is different between net and gross? Gross, something having inaccurate, or we can say through which we are to deduct something, through which we are to deduct something that so that we can get net. So it is meaning it is included something which are to deduct through which we can reach the value of net. Okay, so that is gross. So if we talk about gross concept of a domestic product, of the net concept of the domestic product is to be understood both in terms of net or gross concept. We know very well we have just changed the net or gross. We haven't just changed the domestic or national. Okay, so just we have changed the domestic gross and net. Okay, so it will be considered the part of domestic product even it is in gross form, even it is form of net. Okay, so it is the main cause of difference, it is depreciation. If we talk about depreciation, what is depreciation? It is a devaluation, it is a decreasing the value of assets, value of capital assets due to uses, due to afflux of time, and due to these are the main factors which cause the depreciation. We have to make the such kind of payment for their for stabling their production capacity, and that amount which we pay, that is called depreciation. Okay, so the main reason of gross and net step to reach it is depreciation. If we want to reach from gross to net, we are to deduct depreciation. If we want to reach gross to net, we are to deduct depreciation. And if we want to reach net to gross, we are to add depreciation. Okay, so depreciation is the main thing. Remember, keep in mind and keep in your mind that if you want to reach at gross to net, here is a depreciation which can provide you the way of reaching net. Okay, so GDP market price including depreciation, because it is GDP not NDP. Okay, so NDP does not include depreciation. It doesn't matter it is market price or factor cost, it does not include depreciation. This is the main thing which about I am talking right now. Okay, so GDP MP including depreciation and NDP MP does not. Why? Because gross shows the depreciation inclusion. Okay, and net shows deduction of depreciation. Okay, so it is a means depreciation. GDP market price is estimated as a market value of domestically produced market value which is produced in domestically, and final goods and services exclusive of depreciation. If we talk about final goods which is produced which is bought by a final user, it is not included depreciation, it is NDP. Okay, if we talk about NDP, it is those all commodity which is purchased, already has been purchased by the final user, and which has deducted the depreciation. Okay, so it's mean GDP, a market price estimated as a market value of domestically produced and final goods and services inclusive of depreciation. Okay, so if we talk about NDP market price is estimated as a market value of domestically produced, so goods and services exclusive of depreciation. Here the depreciation is already deducted of the fixed assets used in production. I hope you have understood that. So now how can we get, I have told you already, if you want to see, so here is given some examples or some equations. So how can we reach at NDP market price? I will make some separate lesson in my you will learn about the market price or factor cost or basic price in the coming slide, and I will make a separate lesson on these all things in my coming series. So GDP market price minus depreciation, we find NDP market price. Remember this thing, here is a three letters which we are to understand. It is N and D and P. Net, N shows the net and D shows the domestic and P shows the product. We know we are not to change the product, we are to just change. If we talk about in our further class also, we will study about how to change the net to gross and gross to net, how to change the domestic to net national. Okay, so GDP market price depreciation is the main thing which we are to deduct so that we can get the at NDP market price. If we want to reach a GDP at market price, so we are to just add depreciation in NDP market price. Okay, here there will be given any one topic, any one points, so you are to only deduct or add. Okay, so domestic product in a term of market price and basic price or factor cost. If we talk about market price and factor cost and basic price is the same thing. You are not to just be confused in between basic price or factor cost. I tell you what is the basic price. When we talk about basic price, it is mainly talking about the factors payment. If we talk about factor payments, if we made the factor payments, that is called the basic price which you have get, right, after deducting the all factor payments. And if we talk about factor cost, that is the same thing which you have paid. Okay, basic price which you get after paying the factor payments, and factor cost, that is what which you have paid. So this is same thing. Okay, so GDP at market price is what? So GDP at factor cost is what? If we talk about market price, GDP at the market price, so GDP at the market price or factor cost is what? So if we want to get the GDP at market price, so here should be given GDP at factor cost. First of all, we will have to reach at GDP at factor cost. What is different between which reaches to market price to factor cost, or factor cost to market price? That is main difference is indirect tax and subsidies. Okay, if we are capable to sell the any commodity in a market just because we have levied the tax burden, okay, we have this levied all taxes. If we have levied all taxes, then automatically the price of the commodity will rise, and the price of the commodity will rise, then price which is rise due to indirect tax. If we talk about the price of the commodity rise, will definitely that person who are willing to buy that commodity will not be able to buy that commodity, because just because the price has risen because of tax burden. So the producer will not be able to produce that commodity, because that commodity will be costly, not costly, because their demand will be reduced, and thus there will be demand will be low, and thus the producer will not want to produce that or separate commodity which was demand was earlier very high, and due to tax burden demand is reduced. So the commodity should be produced in the economy. The government takes such kind of decision so that the producer produce that commodity and the consumer buy that commodity, so that the government gives subsidies in indirect tax, so that the burden of the tax on the consumer can be reduced. Okay, so here is GDP at market price. If we want to reach at market price, so we are to what? We are to GDP at factor cost plus indirect tax and minus subsidy. That subsidy which was earlier provided by the government to the producer for producing that commodity, if he has produced that commodity, so that will be included in a GDP at market price. So here it is required to minus subsidies. It is subsidies. It is written wrong. Forget this. It is subsidy. Okay. Okay. It is subsidy. So the GDP at factor cost is what? GDP at market price minus net indirect tax. When we talk about net indirect tax, it is subsidy plus indirect tax. So it is what? It is indirect tax plus subsidy. Okay, so that is called combinedly NIT, net. Okay, so if you want to reach at factor cost, we are to just deduct net indirect tax. If you want to reach at market price, we are to just add net indirect tax. So this is the main cause of net indirect tax, which become the cause of market price to factor cost, or factor cost to market price. And we talk about gross to domestic, gross to net. So here the difference is depreciation. Okay, so thank you so much for watching this lesson. Keep studying. Do subscribe the channel for more awesome lesson. Like the lesson if you found it is valuable, and share the lesson to those all people who are keen to do study. Thank you so much. Take care.